here's a video that I wanted to try to just include just to try to help with potential entries and exits. This is one of the most difficult aspects of any trading, and it does require a lot of understanding of market behavior, and basically it has a lot to do with what's your entry, what's your realistic goal. I mean, or do you sit home all day? Are you able to watch the market? Do you not watch the market? Is it something that you need to kind of set something as far as a limit order that you want to do and to be executed? This is why it's always very difficult for somebody to give for people to always get a precise answer as far as entries and exits, because it's really relative based upon a lot of things. First off, if you don't get a great entry, you could be in the middle of the swing. And then it also depends upon your expectation. Okay, if you have an unrealistic expectation, in other words, as we start to drop here, you start to get very excited, thinking you're getting more, and then you wait, and now all of a sudden you're at the bar here, and now you say, okay, well, I'm going to wait a little bit, then it comes back down, then you're saying, well, it just was up there, I'm going to wait a little bit, now you're seeing this trend start to come up, then you get out up here, yeah, this is where you got in, there wasn't a lot, because there was a hesitation on the move. So a lot of times, proper entries or exits is relative based upon psychological aspects, because it depends on somebody, how they, what their thought patterns are about it. When did they hesitate to get into the trade? A lot of times, if you're looking at our initial entries or exits, they are usually, I would say 80% of them are based upon the open or the exit price or the closing price. And we do that because we don't want to have people think that we are, padding the numbers there. But every once in a while, when something becomes extremely obvious, I like to show what we do, and I try to show how to get that entry and why I thought of those entries. So it's important to watch those videos, because I explain in detail what I'm thinking here. In other words, let's show it a perfect example. Here we have a turn, and say we're expecting this to come. Say we're expecting this to come down, and we're trying to we're trying to make an exit. Let's go here. We're here. We're trying to make the exit here, and we're trying to find out where's the best entry. The best exit. Well, here it's a clear understanding that first off, we've got to look at the prior history. Here you have a chart that you're seeing the exit was right here. So the close was right here. Then let me just move this a little closer so we can see a better look here. Here you have the high bar, and it closed right at the high bar. Okay, then you see the open, and then you see the close right in the midpoint. Okay, now we're saying, okay, we're going to exit. Well, what happens during the day? Prices open right where they close, and they end up closing right where they open. But as prices try to come up during the intraday, they exceed slightly the prior high. But this is where it comes down to your expectations. The open should have been the price you would have gotten, because first off, that you had a high bar here, and then you had it close, it opened right at there and could not rally higher. Then you saw it close right in the midpoint. You could have said, okay, well, it opens up, and you say, listen, I want to get out of this because I think it could weaken. So you really should get out of the open. But it depends upon where you got in. Say if you got in, right here, and now that's not a big profit, but the point is are you in it during this corrective move? Okay, entries are very, very difficult, because what they are is it based upon a lot of various things. Are we seeing a gap up? Is it a gap down? Are we shorting? Obviously, are we shorting? Are we open? Or are we going at the open? This can really change the dynamic of it. What we don't do here is we don't do the intraday alerts as far as when we're going to have when we're putting in the buy, when we're doing the sell, and the reason being is it's logistically not feasible. Just wouldn't work. And also, we do not want to disappoint our members here. So I find a lot of times I don't want to tell people exactly where they need to be buying these things, because it really, first off, it does two things that I think are a mistake. It doesn't empower the other person to learn how to trade, and also it can really wear at the confidence of myself and what we do here. Because, for example, if we say, listen, buy at the open, and then you could have gotten a lower price during the intraday, then you're going to have unhappy people, because they're going to immediately say, well, it sold off a little bit, how come I didn't get near the low, you told me to buy right here. And so there's, right from the gate, you create an impossible situation that people are going to always be unhappy with, because there's really no way to make people happy in that regard. They say they will be happy, but from my experience, and I've got a lot of experience in this, people will always be disappointed because they always expect unrealistic things to be given to them. It is unrealistic to say you're going to always get a perfect entry and exit. But what can be shown, and what we're going to be teaching, and we're going to be working out a video where it's going to talk about entries, exits in extreme detail, that is going to help a great deal. But what I can do to try to help you here in this video is give you some quick tips that I think are going to help you do very, very well, or at least find the majority of the high or low for the day. Here's another chart of a 15-minute on the S&P. And I'm going to give you usually a rule. Now, it doesn't work all the time, but it works a lot of the time if you're looking for certain things. And if you add them with my numbers that I give you, and also common sense, you can do very, very well with this one tip that not a lot of people may have paid attention to, but we're going to tell you now. Most of the highs and lows usually occur around 10 o'clock or 11 o'clock. Here's a perfect example. Here's the prior day's trading right here. And you see on the open, they open it up here, but they try to rally it. But if you look at it, here is the 10 o'clock. Then you see it trying to do it until 10:30, but it comes down. Then you see the low at 11 o'clock. So you had the low right here. So right here, if you were to say, I want to go long, here I go long here, and now I know you got to say, use common sense. What's my exit would be? Well, here was yesterday's close. So yesterday's close is always going to provide some support or resistance or important numbers. So boom, there you go. You catch this high, you catch that high, and you would know, as here's my exit, it's based upon prior information. So if you use it along with the time frames, along also with common sense, say retracements and things of that sort, it can be extremely powerful. Here's another example. Look at this real big decline here. When should you be a buyer? Well, look, right down near 11 o'clock almost. You could see only a couple more ticks, and look at this. Price back to 1200. We told everybody 1200 was important, so you had a 10-point move, and you should have been losing the issues. So then you look, it comes back down, and it tries to eventually rally. But see, this is where you use very, very common sense here. You see your retracement. Okay, you say, okay, well, we're seeing prices come down. Then you see them come back up. And then you see them break back over the 1200 range, and then accelerate. Where are they coming? Back to prior resistance. Well, this was prior support. Now it's resistance. You see the correction. Tries to come back, almost comes back to the line, and then you see it start to come again. What time is that? That's 10 o'clock, right on the low. So if all you did is just listen to that, 10 o'clock on the low after the sell-off, boom, a 20-point move to the upside. So, this is a very powerful technique. A lot of people dismiss it. So, for me to give you, we don't do the alerts all the time. We want you to be here forever. We feel that we do give extremely accurate forecasts with the overall market. And I got to believe we're very, very competitive with others that cannot be as precise as we are. So that alone, just to make sure that you're protected and understand where the market's going, worth our membership. But outside of that, we are going to be working out a DVD service that is going to be doing this kind of thing, but in a very detailed, very easy to understand format that is going to help all of you, if you choose to get it, work on entries and exits, because we understand it's very important. But for the most part, what we do is we use this. If we're going to factor in what our exits or entries, it's based upon the time frame, either 10 o'clock or 11 o'clock, high or low, and then also the open or close price, because we don't really mix it up too much. Believe me when I say I could usually get the lows or highs very accurate. What I'm going to be doing is I'm going to be teaching people how to do that themselves. There's the old story that give somebody a fish and they're going to eat one day, and teach them how to fish. They'll be able to eat for a lifetime. And that's what we want to do here. We want to not only help you make money, but we want to show you how to do it in a very simple way. And even if you have a busy schedule, we're going to show you how you can set up your stops and your exits accordingly. But to have somebody spoon feed you the entries and exits would never really work. You'd never really exactly be very satisfied, because we wouldn't really be able to know exactly what your entry or exit would be, and if it was a realistic exit for you. So I hope you appreciate the fact that I took some time to personally give you this video, and I hope you liked it.